Good morning, traders. Today is on 23rd September 2025. We have a key look of some fundamentals data in the market. We have a look on we have several fundamentals like at around 10:30 we shall be having some data that will be being released in the euro. That German flash manufacturing PMI and German flash service PMI. Still, we have GBP flash manufacturing PMI. Still, we have flash service PMI. That is for the GBP. Still, we have flash manufacturing PMI and we have flash service PMI for the United States. Still, at 7:35, we have a speech from the Powell or Fed Chair Jerome Powell that will be taking place at 7:35, that is Kenyan time. So as well as any data in terms of the US, because at this point this is our gold rush daily, so we need to look at it very very positively, and we should align ourselves. So any figure that will be like for the fresh PMI and the fresh service PMI, it is a data that we focus for a 50, more than 50. If we get a 50 plus, that is a good figure for the currency. So that means the USD might strengthen a bit while affecting the gold to move downside. So you must check on it. Then still we have the Fed Chair Powell speak, whereby this speech is scheduled to take place at Rhode Island at Great Province Chamber of Commerce. So the content of this speech, mostly for me, I'm looking at it might be hawkish sentiment during this time. So he will deliver a speech on the economic outlook, followed by a question and answer offering insight into Fed's future policy direction. Market are watching for cues about the rate cut that is going to take place during this year, and still we are still looking for further another 25 base points rate cut before the year ends. That is the fourth quarter of the year. So let us look for the DXY before we move. So we need to look at it in the weekly time frame so that we can be able to know the direction of the DXY. And for the DXY, currently it is moving on a downward, on a bearish move. If you can be able to have a good look at it. So even this week is very bearish, and last week it was a bit bullish. Let's have a look on it so that we can be able to be giving the actual information so that you can even be able to confirm to yourself. So last week it was a bullish one, but it was not. It's a dragonfly doji. So then we had several indecision candles for buys, but they all closed us bearish. So we can look for at the daily time frame, and we can be able to see some selling pressure in the market. You can be able to see them, and we have a trend line at this point, and still we have a key zone here. We can be able to mark it, still going lowering the risk on the downside, so that we can be able to have a very very high probability technical analysis session. So we mark that zone as our key zone of interest because this is a varied order block, because there was a break of structure at this point. We look at it that way. We had a break of structure at that point. At the same time, we had here there is an order block. We need to draw it, and still we lower the risk on the lower time frame, so that we can be able to align ourselves. But the order block was already retested and the market, and there was some sweep of liquidity at this point by this candlestick. So then we look at it on the 4 hours time frame so that we can be able to know a clear direction for the market today. So still today we are looking for a bearish sentiment, because even the way the price that has been respecting this trend line, you can be able to see the market goes down, comes down, and it traces the order block, the trend line, sorry. After respecting the trend line, the market goes down, coming and retesting the trend line, then it will move eventually down. But we must wait, and sometime it might come again to that zone, still move to the zone to continuation move on the downside. So that is our projection on the DXY. Then still for the dollar, or for the gold, we are looking at we have been a bullish trajectory for the last 6 weeks. We have been bullish, very very bullish. If you can confirm yourself. So for the daily time frame, we are looking for some key zones that we need to check on so that we can be able to brace ourselves with them, so that we can be able to have high probability setups for buys and to buy gold further. So we just have several opportunities here in the market, and the market is offering the best it could. So for the daily time frame, we have marked this zone because there is a bullish engulfing candlestick pattern, as well as this point we have a bullish engulfing candlestick pattern. We also have another one at this point, that is a bullish engulfing candlestick pattern. We have actually two. So we just need to take the last bullish engulfing, that is high probability. This one was a very very high probability actually. So that is a bullish engulfing. So our work in the lower time frame is just go to lower the risk on the lower time frame so that we can be able to have high quality setups like this one. We need to lower the risk to this point, to that point, so that we can be able to have a very high opportunity for pressing our buys or sells in case the order block is violated. So for the last 4 hours, we have been able to see that the market has closed as a dragonfly doji. So we need to be able to check on it very clearly so that we can be able to know what to do. Still, we still have another zone at this point. We need to check for buys or buy opportunities at this point. It can give us a buy opportunities. That is a key zone that the market was at some point confused either or a buy or a sell, because this is a standard doji, which helps you to be able to align yourself, because this is the 4 hours time frame. So if we go to the 1 hour time frame, we can be able to see a different figure. So as well as the time that we come to the lower time frame, we can be able to see it is actually a high probability zone in the 1 hour. So again, we come and lower the risk further to the zone. A good buying opportunity at that point. So we just need to align ourselves with those zones. Those are the high probability zones. Then internally, we still have other zones that we can buy at. We still have other zones that we can buy at. So we just have lowered our risk to that extent, that is 1 hour. So in terms of today, let's just have a look at it. Then after the 1 hour time frame, still at this point, we still have a key zone of interest. There is an engulfing here. We just press it there. Still there is a, let's go to the 15 minutes time frame so that we can be able to still align ourselves further. So we just lower the risk and bring this candlestick to the latest bullish engulfing that was created. We can put it at that point, but in terms of the ICT concept, we put it on the last downward move or upward move depending on the side of the market that you're looking at. So for this one, we just bring this was high probability setup that was here. This one I didn't take it. It happened. It allowed this took place at around. It was at night around 3, 4 around there. So still we can look further for more buys opportunities because the price always respect. Here there was the reason why I'm saying that this was a high probability move, this one for the upside, because at this point we had just drawn this order block at this point, at that point. So the thing that makes it a high probability opportunity, there was something called FVG that was created just after at the support level. There was an FVG at that zone. At the same time, there was a BOS that was a break. There was a break of market structure BOS at that point. From there, if you can confirm yourself, the market really rushed on the upside. So at the same point, at the same point or at the same zone again, we still have another opportunity at this zone. At this zone, we have a key interest zone, but still, this is a zone still to have a look on at it, because if you go on the 1 hour time frame, uh, on the 1 hour time frame, it is not that high probability. So the high probability setup to watch is this one at the 15 minutes time frame, because if you go on the 1 hour, because before you press a trade, you must confirm whether the same statement is confirming to the three times time frames above you before pressing a trade. So at this point, there was some of internal sweep or some internal liquidities were taken out, but at this point, we still have a break of an FVG at this point, a fair value gap. We have a fair value gap at that point. So any push to this level, any push to this level, it gives us a buying opportunity to the upside, because we are looking for a strong gold for today. Even the fundamentals indicates that we are looking for a very, very strong move on the upside. So after this one has already been retested, you need to look for some buying opportunities at this point. So for me, I'm just aligning myself on some buying opportunity, and you must ensure that you roll the risk as much as you can. Then you can target these liquidity zones. You can target those zones so that you can be able to be at free risk. So those zones are about 200 pips above, actually 19 around there. So, but you must ensure that for me, I buy is when the price digs in between the order block, because at this point we have the order block might be huge. So let's know how big it is. 50 pips. For me, that is very huge risk. For me, I just target risking 30 pips. Just target risking 30 pips. Targeting for this zone, we just need to target at 200 pips. But if you see the market is trying to break above the zone, this zone, if you do your analysis and you see the market will break above the zone on this push on the upside, you can still hold, and maybe you can be trading stop loss. You can be bringing stop loss on the upside as you move further. So That's the way that you are looking for the gold that way. Mark your zones. This is a zone. So still, if the market does not respect this zone and breaks below this zone, remember there might be some sweep of liquidities at this point. It might sweep the liquidity. So you must wait when the price is going on the upside. Don't place a pending order, because you might place a pending order and the market will take you out when it is taking liquidities, because most of the time market tries to manipulate traders, because at this point it did the same. It swept out some liquidity. So if you had placed an order just below, then you place your stop loss just below the order block, you are doing something that is called the market will hunt those stop losses that you have pressed there. So at this point, many traders are looking to place their trades at this point. So you should be very, very, very careful when you are placing your trade here. So you must wait for confirmation, because here there will be manipulation of the market due to those many traders that are looking for some buying opportunities. So then a break on the downside, if the body of the candlestick, like two of them, you see the body of the candlestick has broken on the downside, you must wait for a retest. Then we see a push on the downside. So that's how we align ourselves. Then the market might hit this zone, then the market goes up. So that's how we are targeting ourselves. So here there is also another key zone of buy. So that's why you are always advised to risk what you are able to lose, but not 100%. So you should risk 2% of your account, that is maximum. But if you can be able to risk less than that, the better. So that's how we do it for today, and thanks for watching. Remember to like the video, subscribe, support us, comment, tell us what we need to improve in case you see that there need some improvement, so that we can be able to give very high quality videos and also market education. Remember, this was just market education, but not market advice. So you should always seek due diligence before you make your investment choices. So always seek due diligence. We were just providing market education and market evaluation. So thank you for your time. May God bless you all.